Security leaders who understand business become strategic partners. Those who do not remain operational specialists. Welcome to Domain 2 of the ASIS CPP Mastery Series 2026. Many security professionals spend years mastering investigations, physical protection, crisis response, and risk management. Yet, when they move into leadership positions, they discover that technical security knowledge alone is not enough. The modern chief security officer sits at the executive table. They discuss budgets, strategy, governance, organizational objectives, and business performance. The CPP examination recognizes this reality. That is why Domain 2 focuses on business principles and practices. This session is designed to help you think beyond security operations and begin thinking like an executive leader who understands how organizations create value, manage resources, and make strategic decisions. Let's begin by understanding exactly what you will master in this session. This session is organized around 4 major themes. First, we will explore business foundations and understand why business knowledge is essential for security leaders. Second, we will build financial fluency by learning how to read financial statements, understand budgets, and justify security investments. Third, we will examine governance and strategy, including organizational structures, performance measurement, and project management. Finally, we will discuss the executive mindset, the ability to think and communicate like a business leader rather than only a security specialist. By the end of this session, you should be able to connect every security decision to business objectives, financial impact, and organizational value. The role of the security executive has changed dramatically over the past 2 decades. Security is no longer viewed merely as a support function responsible for guarding assets and responding to incidents. Today, organizations expect security leaders to contribute to strategic discussions, manage enterprise risks, support business continuity, and protect organizational value. To do that effectively, security professionals must understand how businesses operate. They must understand what executives care about, how organizations measure success, and how security decisions affect profitability, reputation, and growth. This shift from operational specialist to strategic business partner lies at the heart of Domain 2. Traditionally, security professionals focused on protecting assets, responding to incidents, and enforcing policies. These responsibilities remain important, but they represent only a portion of what modern security leaders do. Today's security executive acts as a strategic advisor to leadership. They partner with business units, participate in enterprise risk discussions, and help organizations navigate uncertainty. They are expected to understand operational priorities, financial implications, and strategic objectives. The transition from operational manager to executive leader requires a different set of skills: business knowledge, communication ability, financial understanding, and strategic thinking. The CPP certification prepares professionals for exactly this transformation. Every significant security event eventually becomes a business problem. A cyber attack is not merely a technology incident. It disrupts operations, affects customers, damages reputation, and may trigger regulatory penalties. A workplace violence incident is not simply a security failure. It affects employee morale, productivity, legal exposure, and public trust. A supply chain disruption becomes a revenue problem. A data breach becomes a reputation problem. A compliance failure becomes a financial problem. This is why security leaders must understand business. Security decisions have consequences that extend far beyond the security department. The most successful security executives think about organizational impact, not just security impact. One of the most important lessons in Domain 2 is this: executives rarely approve projects simply because they improve security. They approve projects because those projects reduce risk, protect revenue, support growth, or create measurable business value. When presenting a security proposal, executives will ask questions such as: how does this protect income-generating capability? What measurable return does this investment provide? How much risk does this reduce? How does this support organizational strategy? Security leaders who can answer these questions become trusted advisors and strategic partners. Those who cannot often struggle to secure resources and executive support. The ability to translate security into business language is one of the defining characteristics of a CPP professional. Now that we understand why security leaders need business knowledge, the next question becomes, what are organizations actually trying to achieve, and how does security contribute to those objectives? That takes us into our next section. How businesses create value. Although organizations may differ in size, industry, and mission, almost all of them pursue a few common objectives. They seek profitability or financial sustainability. They strive for growth and long-term competitiveness. They want to earn and maintain customer trust, protect their reputation, and create value for stakeholders. Every strategic decision in an organization is ultimately intended to support one or more of these objectives. This is an important lesson for security professionals because security does not exist independently of the business. The purpose of security is to protect the organization's ability to achieve its objectives. When security leaders understand what the organization values most, they can prioritize resources more effectively and make better decisions. Security is therefore not simply about preventing bad things from happening. It is about enabling the organization to achieve its goals with confidence. Organizations create value through a process often referred to as the value chain. Resources such as people, technology, information, and capital are transformed through operations into products and services that generate revenue and organizational value. At every stage of this process, security plays an important role. Security protects employees who operate critical processes. It safeguards facilities and technology that enable production. It protects information that supports decision-making and preserves customer trust. A disruption at any point in the value chain can create significant operational and financial consequences. This is why modern security leaders focus not only on protecting assets, but also on protecting the organization's ability to create value. When executives invest in security, they are ultimately investing in the resilience and continuity of the value chain. For many years, security was viewed as a cost center, an expense that generated no measurable return. Today, leading organizations recognize a different reality. Effective security enables business. Organizations are more willing to expand into new markets, adopt new technologies, and pursue strategic opportunities when risks are understood and appropriately managed. Security creates the confidence necessary for growth. It supports customer trust, protects brand reputation, and strengthens organizational resilience. This is why modern security executives position themselves not as enforcers of restrictions, but as partners who help organizations take calculated risks safely. A strong security program does not prevent business activity. It makes sustainable business activity possible. In this section, we explore organizational structure and governance. For security leaders, technical expertise alone is not enough. Understanding how an organization is structured, who makes decisions, and how authority flows is essential for influencing stakeholders and implementing effective security programs. Strong governance ensures that security objectives align with overall business goals. No two organizations are structured exactly alike. Reporting lines, decision-making authority, and communication channels can vary significantly, and security leaders must adapt their programs accordingly. A functional structure groups employees by department, such as finance, human resources, operations, and security. Decision-making is usually centralized, and communication follows clear hierarchies. A divisional structure organizes the company by product lines or business units. Security responsibilities may be decentralized, requiring close coordination across different divisions. A matrix structure involves dual reporting relationships. Security leaders often have to balance competing priorities and manage influence rather than relying solely on authority. Finally, a geographic structure organizes operations by region or country. Security programs in these organizations must address different local regulations, cultures, and risk environments. Understanding organizational structures is essential because security strategies, reporting relationships, and decision-making processes must align with the way the organization itself is organized. Governance is the system through which organizations are directed, controlled, and held accountable. Strong governance provides oversight and ensures that decisions are aligned with organizational objectives and stakeholder expectations. Effective governance rests on 4 key pillars. The first is accountability, which establishes clear ownership of responsibilities and outcomes. The second is oversight, ensuring that boards and executives monitor organizational performance and risk. The third is ethics, promoting responsible conduct and a culture of integrity. The fourth is strategic alignment, ensuring that every major initiative supports organizational objectives. For security leaders, governance is critically important because it determines how security receives executive support, resources, and organizational authority. A key CPP principle to remember is the distinction between governance, which provides oversight and direction, and management, which executes and implements decisions. Security professionals work with stakeholders whose priorities frequently differ and occasionally conflict. Managing these relationships effectively is one of the most important leadership competencies. Internal stakeholders include executives, board members, employees, business unit leaders, human resources, finance, legal, and operations teams. External stakeholders include customers, business partners, regulators, government agencies, investors, and insurance providers. Each stakeholder group has different expectations regarding security. Executives may focus on risk and profitability. Regulators emphasize compliance. Employees care about safety and ease of operations. The most successful security leaders understand these differing perspectives and build partnerships based on trust, communication, and shared objectives. In many cases, stakeholder management determines whether security initiatives succeed or fail. We now move into one of the most heavily tested sections of Domain 2, financial fundamentals. Many security professionals underestimate the importance of financial literacy. However, senior leaders make decisions using financial information every day. Security executives must understand budgets, business performance, and the financial implications of risks and investments. Financial literacy enables security leaders to communicate effectively with executives, justify expenditures, and demonstrate the value created by security programs. You do not need to become an accountant to succeed on the CPP examination. However, you do need to understand the basic financial concepts that influence executive decision-making and organizational priorities. These concepts will help you speak the language of business and become a more effective strategic partner. Every security initiative ultimately competes for organizational resources. Executives expect security leaders to explain not only what they want to do, but also why the organization should invest in it. Financial knowledge helps security professionals in 3 important ways. First, it helps build credible budgets by aligning requests with organizational realities and financial constraints. Second, it helps justify investments by framing security expenditures in terms of risk reduction and value protection. Third, it helps measure performance by demonstrating the financial benefits of effective security programs. A security leader who understands finance gains credibility, communicates more effectively with executives, and is far better positioned to secure resources and influence strategic decisions. At the heart of every business is a very simple relationship. Organizations generate revenue through products, services, and operations. They incur costs to produce those products and deliver those services. What remains after expenses are deducted is profit. This relationship is fundamental because executives evaluate nearly every decision, including security investments, according to its impact on profitability. Security incidents can affect both sides of the equation simultaneously. A cyber attack, for example, may reduce revenue by interrupting operations while also increasing costs through recovery expenses, legal fees, and regulatory penalties. Understanding the relationship between revenue, cost, and profit allows security leaders to explain how effective security programs protect organizational performance and support long-term success. Now that we understand the financial foundations of business, the next question becomes, how do executives actually measure organizational performance and financial health? To answer that, we will examine the 3 financial statements that every CPP candidate should understand. The income statement, the balance sheet, the cash flow statement. To understand an organization's financial health, executives rely on 3 important financial statements. Each tells a different part of the story, and each has relevance for security professionals. The first is the income statement, which measures organizational performance over a specific period by showing revenues, expenses, and profit. The second is the balance sheet, which provides a snapshot of what the organization owns, what it owes, and the value remaining for owners. The third is the cash flow statement, which tracks how cash moves into and out of the organization. Together, these statements help leaders understand profitability, financial strength, and liquidity. As a CPP professional, you do not need accounting expertise, but you should understand how security incidents and investments can affect each of these financial measures. The income statement is often called the profit and loss statement because it shows whether the organization made money or lost money during a specific period. It begins with revenue, subtracts the cost of goods sold, and eventually arrives at net profit. For security leaders, the income statement is important because security incidents often have a direct impact on profitability. A major operational disruption can reduce revenue. An incident response effort can increase expenses. Regulatory penalties and legal settlements can further reduce profits. Understanding the income statement helps security professionals explain the financial consequences of risk and demonstrate the value of effective security programs. A useful CPP reminder is to understand the difference between gross profit and net profit, as examination questions frequently test this distinction. The balance sheet provides a snapshot of the organization's financial position at a particular moment in time. It consists of 3 major components: assets, liabilities, and equity. Assets are everything the organization owns, including buildings, equipment, technology, inventory, cash, and intellectual property. Liabilities represent obligations such as loans, debts, and accounts payable. Equity is the value that remains for owners after liabilities are deducted from assets. Security professionals should pay particular attention to assets because protecting organizational assets is one of the fundamental purposes of security. At the same time, security incidents can create new liabilities through lawsuits, regulatory actions, and contractual claims. Understanding the balance sheet helps security leaders appreciate the broader financial implications of risk management. An organization may appear profitable on paper and still face serious financial challenges if it does not have enough cash to support operations. This is why cash flow is so important. Cash flow is generally divided into 3 categories. Operating cash flow represents cash generated from normal business activities and is often considered the healthiest source of cash generation. Investing cash flow reflects purchases and sales of long-term assets, including major projects and infrastructure investments. Financing cash flow involves borrowing, debt repayments, and transactions involving investors or shareholders. From a security perspective, cash flow affects the organization's ability to invest in technology, hire personnel, and respond effectively during emergencies. Security leaders who understand cash flow are better prepared to align their recommendations with financial realities. We now move into another essential leadership competency: budgeting and cost justification. Security leaders constantly compete for limited organizational resources. Having a good idea is not enough. Leaders must be able to explain why a proposed investment deserves funding. Budgeting involves forecasting needs, allocating resources, and prioritizing initiatives. Cost justification involves demonstrating how a security investment reduces risk, protects value, or supports business objectives. Security professionals who master budgeting gain credibility and influence. Those who cannot justify expenditures often struggle to obtain resources, even when the underlying need is legitimate. This is why financial communication skills are so important for modern security leaders. Security expenditures generally fall into 2 categories: operating expenses, often called OPEX, and capital expenses, known as CAPEX. Operating expenses are the recurring costs of running the security program. Examples include salaries and benefits, software subscriptions, licensing fees, training expenses, and maintenance contracts. Capital expenses involve long-term investments that provide value over multiple years. Examples include surveillance systems, access control platforms, major infrastructure upgrades, and facility construction. Understanding the distinction between these two categories is important because organizations often evaluate and approve them differently. A successful security leader knows how to structure proposals appropriately and explain why an investment should be treated as an operational expense or a capital investment. This financial discipline significantly improves the likelihood of securing executive approval. We now understand how organizations measure financial performance and how security leaders justify investments. The next question becomes, how do we determine whether security programs are actually producing results and delivering value? To answer that, we move into the next section: performance measurement, project management, and organizational resilience. Senior executives evaluate every proposal using one fundamental question: does this investment create more value than it costs? Security proposals are no exception. Effective security leaders therefore present their recommendations in business terms rather than purely technical language. A security investment should ideally accomplish three things. First, it should reduce risk by lowering the probability or impact of adverse events. Second, it should protect value, including revenue, assets, reputation, and customer trust. Third, it should support organizational objectives, such as growth, compliance, resilience, or operational continuity. The strongest business cases are those that clearly connect security investments to measurable organizational benefits. This shift from spending money on security to investing in value protection is a defining characteristic of strategic security leadership. Executives expect security leaders to justify investments using measurable business outcomes. One important tool for doing this is return on investment, or ROI. Security leaders often estimate value using three concepts. The first is annualized loss expectancy, or ALE, which estimates the expected financial loss from a particular risk over a year. The second is cost avoidance, which measures the losses that a security investment prevents, such as legal costs, business interruptions, or remediation expenses. The third is the payback period, which calculates how long it will take before the benefits of an investment recover its initial cost. While not every security benefit can be perfectly quantified, using these financial tools significantly improves the credibility of security proposals and helps executives make informed decisions. A security program without strategy often becomes reactive, fragmented, and difficult to justify. Strategic planning ensures that security initiatives directly support organizational objectives and address the most significant risks. At the same time, organizations need performance metrics to determine whether their strategies are actually producing results. Metrics provide evidence of effectiveness, demonstrate accountability, and help leaders make informed decisions about future investments. Security strategies that exist in isolation from business strategy rarely receive long-term support. Successful security leaders therefore ensure that planning, performance measurement, and organizational objectives remain closely aligned. Strategy is simply a deliberate plan for moving from the present state to a desired future state. Every effective strategy answers three important questions. First, where are we today? This means understanding the current security posture, existing risks, and operational challenges. Second, where do we want to go? This defines the desired future state and establishes strategic objectives. Third, how will we get there? This involves identifying initiatives, resources, timelines, and responsibilities. Security leaders who think strategically avoid reacting to every problem individually. Instead, they focus on long-term priorities and ensure that resources are used in ways that create the greatest organizational value. Even the best strategies fail if objectives are vague or impossible to measure. This is why security leaders use the SMART framework. Objectives should be specific, clearly defining the desired outcome; measurable, allowing progress to be tracked and verified; achievable, realistic given available resources; relevant, directly aligned with organizational priorities; and time-bound, containing a clear deadline for completion. For example, saying improve physical security is too broad. A better objective would be reduce unauthorized access incidents by 20% within the next 12 months. SMART objectives improve accountability, simplify performance measurement, and make it easier to demonstrate results to executives. Security programs should measure outcomes rather than simply counting activities. Installing cameras or conducting patrols is activity. Reducing incidents, improving response times, and increasing compliance are outcomes. Several performance indicators are commonly used. Incident rates measure the frequency and severity of security events. Response times measure how quickly incidents are detected, reported, and resolved. Audit findings indicate weaknesses identified through internal or external assessments. Compliance metrics measure the degree to which policies, standards, and regulations are being followed. The purpose of measurement is not merely to produce reports. It is to understand whether the organization's risk profile is improving and whether security investments are delivering value. That is the true purpose of performance management. We have now explored financial decision-making, strategic planning, and performance measurement. The next section focuses on a broader question. How do organizations prepare for disruptions and build long-term resilience? We now move into business continuity, organizational resilience, and the executive security mindset. Every major security initiative is, in reality, a project. Implementing a new access control system, building a security operations center, introducing new policies, or conducting a major risk assessment all involve project management principles. Projects consume resources, require coordination, and have specific objectives and timelines. The difference between successful and unsuccessful security programs often comes down to execution. Great ideas alone do not create results. Disciplined planning and effective project management do. Security leaders who understand project management deliver initiatives on time, within budget, and in alignment with organizational objectives. Those who neglect project management often consume resources without producing meaningful outcomes. That is why project management has become an essential leadership skill for modern security executives. Security leaders regularly oversee projects of varying size and complexity. Some projects involve technology, such as upgrading surveillance systems, implementing access control platforms, or deploying physical security information management systems. Others involve facilities, such as constructing command centers, hardening critical infrastructure, or redesigning secure areas. Still others involve organizational change, including policy revisions, training initiatives, or restructuring security operations. All of these projects require careful planning, resource allocation, and coordination among multiple stakeholders. The ability to manage projects effectively allows security leaders to transform ideas into measurable business outcomes. This is why project management skills are increasingly viewed as executive competencies rather than merely administrative tasks. Most successful projects follow a structured life cycle consisting of 4 key stages. The first stage is initiation, where the problem is identified and project objectives are defined. Next comes planning, where schedules, budgets, resources, risks, and responsibilities are established. The third stage is execution, during which the project deliverables are produced and implemented. Finally, there is monitoring and control, where progress is tracked, performance is evaluated, and corrective actions are taken when necessary. Each stage creates outputs that become inputs for the next stage. One of the most common reasons for project failure is insufficient planning. Disciplined preparation early in the project often prevents costly problems later during implementation. Technical excellence alone rarely determines whether a project succeeds. More often, success depends on stakeholder management. The first requirement is communication. Different stakeholders need different information, and updates should be tailored to their concerns and responsibilities. The second requirement is engagement. People are far more likely to support a project when they are involved in decisions that affect them. The third requirement is alignment. Security leaders must proactively address conflicting priorities and ensure that stakeholders remain committed to project objectives. Many projects fail not because of technical shortcomings, but because stakeholders lose confidence, misunderstand expectations, or resist change. Effective stakeholder management, therefore, becomes one of the most important leadership responsibilities in project execution. No organization can prevent every disruption. Natural disasters, cyber attacks, supply chain failures, and operational incidents will eventually occur. Modern organizations therefore focus not only on prevention but also on resilience. Resilience is the ability to absorb disruptions, continue critical operations, recover quickly, and adapt to future challenges. Business continuity planning is an essential part of this capability. It ensures that critical processes remain operational even during periods of significant disruption. For security leaders, resilience is no longer an optional capability. It is a strategic necessity that directly supports organizational survival and long-term success. Business continuity is much more than an emergency response program. It is an organizational survival strategy. Effective continuity planning protects revenue by minimizing downtime and reducing operational disruptions. It helps retain customer trust because organizations that recover quickly demonstrate reliability and competence. It also protects reputation because the way an organization responds to adversity often shapes stakeholder perceptions for years afterward. Security leaders play a critical role in designing and implementing continuity capabilities. They help identify critical functions, coordinate preparedness activities, and support recovery efforts during crises. In today's interconnected world, resilience and continuity are among the most valuable competitive advantages an organization can possess. We have now covered business continuity and resilience. The final section of this presentation brings everything together by focusing on one central question. How should CPP professionals think and act as business-oriented security leaders? In the concluding slides, we will discuss the executive security mindset, thinking strategically rather than operationally, key lessons from Domain 2, final takeaways and closing remarks. Resilience is not a single capability or a one-time exercise. It is a continuous cycle of preparation, action, learning, and improvement. The first stage is prepare. Organizations identify risks, develop plans, train personnel, and establish response capabilities before a disruption occurs. The second stage is respond. When an incident happens, leaders take immediate action to protect people, stabilize operations, and limit damage. The third stage is recover. Critical processes are restored, operations resume, and the organization works toward returning to normal performance. The final stage is adapt. Lessons learned are incorporated into policies, plans, and capabilities so that the organization becomes stronger and more resilient. The most resilient organizations are those that continuously move through this cycle and improve after every disruption. One of the biggest transitions a security professional can make is moving from specialist thinking to executive thinking. Traditional security thinking often focuses on threats, vulnerabilities, and individual incidents. The CPP mindset goes further and asks, what is the business impact? How will this risk affect operations, finances, reputation, and organizational objectives? Executive security leaders understand that security exists to enable the business, not to operate independently from it. They communicate in the language of value, risk, and strategic priorities. This shift in perspective is one of the most important lessons of Domain 2 and one of the defining characteristics of successful security executives. The CPP examination is designed to transform security professionals into business-oriented leaders. This requires developing 4 important habits. First, understand strategy. Every security initiative should support organizational direction and long-term goals. Second, understand finance. Security leaders need to discuss budgets, costs, and return on investment with confidence. Third, manage stakeholders. Executive support and cross-functional partnerships are essential for successful security programs. And fourth, align security to objectives. Every recommendation should be presented in terms of the business value it protects or creates. This way of thinking separates security managers from strategic security executives. One of the biggest mistakes CPP candidates make is trying to memorize definitions without understanding how to apply concepts. The CPP examination rewards reasoning and judgment, not rote learning. When approaching a business scenario, train yourself to ask 4 questions. What is the business objective? What is the financial impact? What risk is being reduced? And finally, how does security create value? These questions force you to think like an executive and approach problems from a strategic perspective. The more you practice this mindset, the more naturally you will solve scenario-based questions on the examination and in real leadership situations. Before we conclude, let's review the most important lessons from this session. First, business knowledge is non-negotiable. Security leaders must understand how organizations operate and create value. Second, security is a strategic business function. Effective security programs enable growth, resilience, and long-term success. Third, financial literacy opens doors. Budgets, financial statements, and investment analysis are the language of executive decision-making. And fourth, strategy and metrics define success. Objectives and performance measurements transform security from a cost center into a measurable value driver. These principles form the foundation for every advanced topic we will cover throughout the remainder of Domain 2. Congratulations on completing Part 1 of Domain 2, Business Principles and Practices. In this session, we explored the business concepts that every modern security leader must understand, including governance, finance, budgeting, strategic planning, project management, and organizational resilience. In Part 2, we move from concepts to application. We will work through moderate-level business and management scenarios similar to those frequently tested on the CPP examination. Remember this key lesson. The most effective security leaders do not simply protect assets. They understand how organizations create value and align security to protect and enable that value. Thank you for joining the ASIS CPP Mastery Series 2026. If you found this session helpful, please like, subscribe, and share it with fellow security professionals pursuing CPP certification. I look forward to seeing you in Domain 2, Part 2, Applied Business Scenarios and Decision-Making for Security Leaders.